Good evening, everybody. Today is Sunday, 27th April 2025. We are going to see how the next week, which starts on Monday, 28 April 2025, will go as per the stock market or a money market indices. Let's see the past performance of global indices which took place on Friday and Saturday. On 26th, Western market almost closed nearly in a very good green trend. SP 500 closed nearly 0.74%, Nasdaq closed nearly 1.14%, Dow Jones closed nearly flat. VIX has actually corrected by minus 6.16%. So do the US dollar currency index. It is now moving towards 99.58, may touch 100 in a coming week. Let's see the Eastern market how it closed. Eastern market closed nearly flat. Hang Seng, China A50, Shanghai, it has closed nearly flat. What actually was the news? Treasury Secretary Scott Bessent said that there was going news around globally in a global media market that it is going to be a greatest fall or greatest worst April of a stock market since the Great Depression. But after 10 days later, Nasdaq is now up in a month of April. I haven't seen a story that says stock market has biggest bounce back ever. It's recent news in a Nasdaq on a Nasdaq in a US market indices, which actually says that the Nasdaq was actually uh, Nasdaq has actually was going to correct in a biggest fall in an history, but it didn't happen. This is what uh, Treasury Secretary has said. Contrary to this, IMF has warned China that China should boost consumption to offset slowdown and trade war with US. Basically, China was slowing down in a very steep manner as compared to the global economy stats which are presented by IMF. China has itself injected few liquidities in China market to boost up its consumptions, but still China consumption is not up to the mark as per the IMF. These were the global thing which we should understand, that there are empty cargo containers going back to USA from China. China is going for its tactics, that China is now not pushing a trade with the USA. China is going for a trade deficit with the USA. This will go for a bigger and a very downtrend global economics cycle, which may affect coming 1 year to 2 years cycle if we see a global economic stats. Let's see about a Indian index. Nifty 50. Nifty 50 has closed uh, by nearly a fall, mostly due to emotional or sentimental sell out by almost everybody, retailers, because FIDs have bought it, but retailers have sold all this because of uh, Pakistan versus India border war might be happening. This was a media built narrations because of recent Jammu Kashmir tourist attack, which killed nearly 28 innocent tourists of India. But if we see technical analysis of all this on a chart, we can say that there was a double Adam double bottom pattern formed at a nearly 21,800 zone for a Nifty 50. From there, it was a steep 3,200 points rally, which took off a market as a blinder, The short sellers and FNO traders almost whipped out everything in last 1 week. After this almost a 10% rally, there has to be a phase of consolidation. The phase of consolidation should be near about 23,810 as per my own knowledge, which I marked on this chart. RSI was showing that it was nearly 61.36, almost above the 50% marking. So we can say market was slightly overvalued. When we see last 4 to 5 candles in Nifty 50, we can say it was a consolidated phase in these 3 candles itself. After a big rally, there was a consolidation phase. This is 1, 2 and 3. These 3 candles were formed because there was a phase of big large caps and mid caps results announcements during the end of this week, which was from 22nd, 23rd, 24th and 25th to 26th, a week of quarterly results announcements that made fundamentally make a market in a consolidated phase, because already market was nearly 10% rise from its recent fall. This one big candle is a candle because of that tourist attack which took place on Friday. This candle has formed. If we see this in a neutral manner, we can say that fundamentally also market was overvalued, technically also was in a consolidated phase. I personally feel market should be in a consolidated phase. It should touch 23,800 point. Although the global market is saying a pumped up or a bullish pattern, still I am of a view that market should remain in this phase because company haven't performed. Large caps and mid caps results which have come in last week is an eye opener for many fundamental and technical investors. If we see that market is going to go up from here towards 25,000, a slight correction is needed for all this ballooning of euphoria, because fundamentally and technically big large caps and mid caps haven't performed, all because of taxations, lower consumptions and Trump trade war with India and a global trade which was going around in last 6 months. Soon these quarterly results will show its color on the indices, so better avoid buying even in a green trend. Whatever you have bought should be kept with the uh, manner that 5 to 10% of profit should go for a partial profit booking, and a better opportunity will come in a coming days. So one should stop buying at every each and fall or dip, because this is not actually dip. If even FIs and DIs are buying, they are going for a portfolio shakeup. They are not actually buying, they are actually booking up partial profits or complete profit at one end and buying with same amount of money in a intraday manner to a different end. So this is not actually a buying or selling, this is actually shuffling of a portfolios which have driven a market in last 4 to 5 days. So for a better trend to capture, one should wait and watch in the coming days. These are all educational purposes videos which I make for myself. There is no recommendation buy, sell or hold for any stock. Thank you.